welcome to another episode of Always Up to Date. I'm Denise and this is Yahweh, and we are co-owners of Always Bookkeeping. Today we're going to talk on our video about how to manage your shareholder loan account. And so our quote for today is from Zig Ziglar, and the quote that he has is, "Money isn't the most important thing in life, but it's reasonably close to oxygen on the gotta have it scale." And the statistic that we have for you today is from Industry Canada. 80% of businesses used personal financing to finance their new business. So we have here, we're going to kind of discuss this shareholder loan account. And so we look at business owners who take money from their business to support their household expenses. So this business owner ends up paying more tax from taking money out of the business. The business is growing and profitable. However, there's not enough cash in the business to support operations. So Yahweh, can you tell us what a shareholder loan account is?
So a shareholder loan account is something that you set up in your liability section of your balance sheet to be able to keep track of anything that you take out or contribute to the corporation. Some companies usually use their own equity accounts to do these transactions, but the thing with that is that since it's a share, your value of your shares fluctuates depending on the value of your business. Right. So most accountants would use a shareholder loan account to be able to track the daily transactions or periodic transactions that happens between the shareholder and their own corporation. So that's what a shareholder loan account is for.
Great. Yeah. Oh. And so what kind of transactions should be considered as shareholder transactions?
So a shareholder transaction would be, again, this is like your contribution or your withdrawal from your corporation. You would only have a shareholder loan account if you're if you are incorporated. So technically your corporation is a separate entity from you. So anything that you take out, whether it's withdrawal of cash or even using corporate assets or corporate funds for your personal purposes, that is considered a withdrawal from your corporation, which is a shareholder loan transaction. Another one is when you contribute money into the company. This could be a purchase of shares. Is a little different because that directs directly to your equity. But let's say if you're lending your corporation a little bit of cash for operation, that would be a shareholder loan transaction. Yeah.
Great. So Yahweh, can I owe money from to my company?
Yeah. You can. It is not advisable because once you take out the money, it becomes personally taxable to you. So normally bookkeepers and accountants try to advise their clients not to have an overdrawn shareholder loan account, which is you taking more than what you have contributed to your corporation. However, for CRA's purposes, you can have 1 year of an overdrawn shareholder loan account. It is more common than you think, but again, this is not advisable, right? The reason for that is because a CRA would have the argument where if you owe your money for more than a year, then it becomes a long-term liability. And in that case, why is a company not charging you interest for it? Again, it comes to the question, the principle that you are separate from your own entity. So the corporation and the person are always separate people. So that's why you can owe money for a short amount of time, but try not to, otherwise you'll be charged interest.
Right. So what happens if I withdrew more money than I contributed to my corporation?
That, I think I touched on it a little bit. If you withdrew more, then your shareholder loans become overdrawn. So that means you have a negative shareholder loan account. And most accountants or most bookkeepers, they would have to declare enough salary or dividends to offset that withdrawal, because technically this is you taking out money either or on or as a salary for paying yourself, or dividends for taking out the earnings that you've earned from the corporation, or even just the company loaning you money. So that's what happens, and that's what leads to a negative shareholder loan account.
Right. So what are the tax implications if my shareholder loan is overdrawn?
Okay, I think I touched on it a little bit on the CRA basis. Again, if you have more than 2 consecutive years that your shareholder loan is overdrawn, then the CRA might this might trigger the CRA to look further into your account, and they might look and say again, claw back all the interest that should have been a charge to you from the corporation, from you owing the corporation money. And that could mean a lot of penalties to the CRA and a lot of interest payment that you have to show in your accounts. Yeah.
So should I make personal transactions in my corporate account?
For some people it might not be unavoidable, or it might be unavoidable, but try and make those two separate. Again, it goes back to every time you take out money from your corporation, it is a withdrawal, and you will be taxed personally for it once they declare that salary or dividend. So we recommend to have personal and corporate taxes separate from each other for that reason. And again, your business should have should be your own way of saving money, and you should have always put back your cash into your corporation to make it grow. I think is the most effective way of keeping your business alive.
Yeah, we see lots of people too that use their business credit card for personal transactions. If at all possible, we recommend having 2 credit cards, one personal and one business. So same with your bank accounts, right? So that you have them separate. So it's so much easier to just know these were personal transactions and these were business transactions, because sometimes it's questionable what expense really was a business expense. And you know, if you ever get audited by CRA, you have to prove that it was a business expense. So so Yahweh, how can I pay myself as a business owner?
You can pay yourself through salary or dividend. So there's advantage in both mechanism. Most of the time you want your accountant to look at your actual household situation, especially if you're the sole owner of the corporation, and if you're depending on that corporation to support your family, you would want your accountant to look at what is the best mechanism for you to pay yourself. Salary is usually the most common way that an accountant would declare for them to get rid of that shareholder loan account, or for them to pay you from the corporation. But the thing with salary is that first of all, it decreases your profit, which is important if you have a debt that's looking at your profit and loss. And second of all, you will have to pay your employer and employee portion of your CPP and EI. So that's one thing with the salary. So although it reduces your tax for having a lesser profit and loss, you will have to think of who's the users of your financial statements. Is it your loan that's looking at how profitable you are? Is it your cash flow that's important, that you will actually need those couple thousands for to avoid those CPP and EI? So that's one thing to think about when you're choosing between salary and dividends.
Right. Yeah. Good. So can you kind of tell us what a dividend is?
A dividend is something that your company declared to distribute their profits. So a dividends would show on your balance sheet instead of the income statement because it wasn't necessarily included in your operation. It is mostly your corporation distributing either the current earnings or the previous earnings of the company, and this decreases your retained, what we call our retained earnings. So this is mostly what has been being left in the company after profits and what's after dividends, which is what you distributed out of that earnings.
Right.
Yeah.
Good. And so then what's a salary?
I think I talked about it a little bit more. So, salary is what you pay yourself as an employee. So this is employment income on your personal side. Again, if you choose to pay yourself with salary, you will have to pay the employer portion of it and the employee portion of your CPP and EI. And part of declaring salary is also having to remit installments for your payroll account, because salary, if you're declaring salary, you should have another separate payroll account for CRA, and there's different requirements to that depending on your level of activity.
Yeah.
Yeah.
So how does it affect my financial statements if I pay myself in a salary?
In salary. So again, salary is an expense, so it decreases your profit, it decreases your bottom line, and also again, thinking about the users of your financial statement, if you have somebody that's looking, if you're selling shares and they're looking at profitability, a huge salary would definitely decrease all your profit and loss, and this might not be very good looking for an investor to go on. So yeah, so salary mostly affects your profit and loss by decreasing it. Yeah.
Okay. And so just one last question. What happens if I'm operating as a proprietorship?
So proprietorships don't have shareholder loan account. This is what we call a single entry accounting. If you're doing it for tax purposes, because they only need the totals of each expenses, they don't necessarily have to look how it's affecting your financial position, which is your balance sheet. So, but if you do have both, if you're operating as a proprietorship, anything that you withdraw or contribute to your company gets affected by or affects your owner's equity, which is your share capital. Not share capital, your owner's capital. So instead of having that shareholder loan account separate from your equity account, anything that you contribute or take out of your corporation becomes a deduction or an addition to your owner's equity. Yeah.
Good. So I think that's all the questions that I have.
Yeah. So thanks for joining us today. I hope you find this helpful and informative. Let us know if you have any questions or comment in the section below. And please click like and subscribe, and we'll see you guys next time.